The other set of numbers which came through, of course, was Polycab, right? I mean, same space. Let's get the management on. Numbers were in line with street expectations. Stock actually did well yesterday. Mr. Inder Jaisinghani, Chairman and Managing Director, and Gandharv Tongia, Executive Director and Chief Financial Officer at the company, are with us now to take some questions. Gentlemen, thank you very much for joining us. Good to get both of you on. Could you give us a sense of what has been the volume growth? Mr. Jaisinghani, this question is for you. What is the volume growth that we've seen for FY25? And what is the volume growth that you are expecting for the company in fiscal 26?
And before I specifically deal with your question, let me also give you a broad flavor of the earnings. This was the best quarter as well as the annual performance in the history of the company. We were able to breach 22,000 crore rupees of top line, as well as 7,000 crore rupees of quarterly top line. The profitability was all-time high.
Gandharv, if I can just come in, we have all the numbers, and all the numbers are going to come up on screen as graphics. So if you can we have a lot of questions and limited time, so go on, please.
Yeah. As far as volume is concerned, it was in the fourth quarter mid-teens. The domestic business grew at a very healthy rate. There was a bit of a rollover in the exports order, and that is where the exports performance in the fourth quarter was slightly softer. But on an analyzed basis, exports did well. And the next quarter as well as the next year looks very promising for both exports as well as domestic business.
So overall volume growth in FY26, Gandharv, if you can give us your expectation?
So you know this, we don't give annual guidance. We released our 5-year guidance in the last quarter, wherein we have guided that we'll continue to grow at 1.5x of the industry growth rate, which was a trend even in the last few years. And as far as the second business is concerned, FMEG, there will grow probably at 2x of the industry growth rate.
So, some indication of top-line growth will also help, Gandharv, because in FY25, you did 22,400 crores. The earlier stated sort of round figure target was 20,000 crores, and the company's already surpassed that. You've achieved that. So how much over this can you build? Volumes, you've given us some indication, but in terms of top-line growth, in terms of margins, some indication of what the year looks like?
Sure. So let me give you a business-by-business breakup. 84% of our business comes from cable and wire. There, the industry growth rate is expected between 1.5x to 2x of the real GDP growth rate. And on top of it, we believe that we would be able to grow at a 1.5x of the industry growth rate. So that this number, with some assumptions, likely to be in mid-teens. As far as FMEG is concerned, the industry growth rate in general is in high single digit or just touching the double digit. And there we believe that we should be able to grow anywhere between 1.5x to 2x of the industry growth rate, which means high teens. So that is how we are looking at. We have not given a number-specific guidance, unlike the previous transformational project. But that is how we can compute the likely numbers in.
Okay, so that's top line. Now, on the margin, I want to understand whether this extremely good performance at the end of Q4, I mean, your margins are at 14.7%. Q4 number is substantially higher than the full year FY25 margin number, which is, I think, closer to 13%. So the run rate of Q4, is that sustainable? Should we expect 14% kind of margins for the full year FY26?
So, Surbi, we gave our guidance on EBITDA margin as well in the last quarter. In the next 5 years, we believe that the EBITDA margin in cable and wire business should be between 11 to 13%. And if you see our annualized EBITDA margin for fiscal 25 was also close to 13.1%. We believe this is a sustainable margin. As far as FMEG is concerned, which is the second business, it contributes almost 7 to 8% to our top line. It was a loss-making business till December. In the March quarter, it turned out to be a profitable business. And there we believe gradually and slowly we should be able to get to 8 to 10% EBITDA margin in 5 years from now.
All right. Good morning, gentlemen. Good to see you all in. Just to reconfirm, FMEG, it's turned into the black. It continues in the black from here on, right? We continue to see profit numbers.
Yeah, so directionally, yes, it's quite possible a month here and there, a quarter here and there. But as far as annualized numbers are concerned, looks like that we should be able to go back to the guidance which we gave earlier.
Okay, all right. I need to compliment you all because on the cables and wires business domestically, your market share has gone up, if I remember correctly, from late teens. It's gone up to around 26%. Even in the last year, I'm going by Jeffrey's note, they're saying that you've gained by around 100 basis points. So good going out there. Now the question is what happens from here on? You have two big players that are eyeing the industry. You all have been quite confident that the industry can absorb more number of players. What's your comment with regard to that? The Bidlas and the Adanis are eyeing the space that you all have been dominating. Where does your market share settle at? And what do you make of the competition that's coming in?
Basically, market is growing, and we are already working from last so many years. So unorganized market also is there. So I think so. Organized market is going to be remain same or little bit increase. Unorganized market will be difficult because everybody now people are looking for a quality buy. So they will buy of the all organized sector. So anybody will come. Demand is increasing much more in building construction line. So I think so. It is not going to hit anybody, but at least in initially year when they come, 1 or 2% margin will go down, especially that wires. But within a coming time, who's going to give us service and all, and whose market already there, whose brand already established, I think so. Nobody will have a much problem in that.
So you believe that the industry is big enough. The ones that will lose out is the unorganized players, and the market is big enough to absorb two big players. But can you hold on to this market share? You'll have gained 100 basis points. What is the ballpark number you'd like to work with going ahead?
We are working for a network, and I think so. We will remain that and definitely get a little increased market share.
Right, Gandharv, you want to give us a number, I think so. Please
I
go
think
ahead.
you wanted to know number. That is why.
Yeah, go for it.
Yeah,
go for it.
The industry size, Nigel, is around 95,000 crore rupees as of now, give and take some number. And we believe that industry will continue to grow anywhere between 1.5x to 2x of the GDP growth rate. So in 5 years, roughly, you can assume that this number is likely to be around 1.5 lakh crore, give and take whatever, some numbers. As of now, the unorganized is around 25-27%. We believe this number will materially go down in the years to come. And this is what we have experienced even in last 10 years. And any new player, including the large players like us, would continue to gain market share at the cost of unorganized. And that is where we are confident. That is what even Inder Bhai was alluding to, that market share gain will continue in the years to come.
All right, not being specific with the number, but sounding confident. Very quickly, finally, Gandharv, since it's our first interview of the fiscal year, just give us an update. You have ongoing capex. How much money are you spending on capex? Just the cash position in the company, and would you think of raising equity capital at any point in time this year?
So we have around 2,400 crore rupees of cash in the books of the company as of 31st of March. As part of our Project Spring guidance, which is a 2030 project, we have given guidance of 6,000 to 8,000 crore rupees of capital outlay or capex in next 5 years. And all of this will come through internal accruals. We don't intend to raise any capital as of now. And we have also improved our dividend payout ratio. It was 30 rupees per share in the fiscal 24. And yesterday, the board has approved the payout of 35 rupees per share.
All right, Gandharv, we'll leave it there. Congratulations, and you guys have executed superbly. Best of luck for that. Mr. Jaisinghani, thank you, and good to see you as well, sir. Appreciate it.